Good morning, everyone. Welcome to our Thursday morning session. Hang on one second here while I get you my monitor. So we just saw the market open. You're looking at the NASDAQ on this particular screen. I'm also watching crude oil and soybeans. Soybeans in a little bit of a slide this morning. Here's the soybean market. On the NASDAQ, soybeans very unsettled of late. This was yesterday's session. Look at that, just back and forth, back and forth. And here they are heading lower out of the open. The NQ a little undecided itself. Here it was, well, yesterday. Great rally day yesterday, of course. The market settled down a little bit. Not much in the overnight. Hardly anything at all. And then pre-market, we got this buy signal, and it looks like there's a little bit of follow through off of that at the moment. Okay, Micah is having trouble with the audio. Is anyone else? Can you guys hear me all right? Just a quick sound check. Okay, thank you. All right, I'm just going to let Micah know. Okay, well, we'll just let the dust settle there for a few moments. The NQ has been very reliable just out of the gate. Let's take a look here at crude oil while we're waiting for the NASDAQ, and crude oil almost looking like it's putting together a bit of a bear flag here. So we have the market come down. We've got a little bit of consolidation going on here. We'll see whether this bar forms lower, turns the ATR over. The band technically bullish, but just barely. We do have a substantial trading range in crude that looks something like that. So we'll see. We'll see whether that turns over. Well, actually, I could anticipate that bar if I wanted. Let's see where this trend line falls again. Oh, right on the lows. Oh, see, there's a problem with crude oil. It's just so expensive. Can I cover it above the high? No, I can't. Darn it. Well, I may have to hold out for a falcon signal then, or perhaps a hawk signal, something that I can take with a little less risk exposure. Oh, thanks, Jimmy. The advanced decline, Jim says, is sitting at about 1100 to the positive. We'll see how that holds. All right, well, here we're getting a macro pullback. Say, oh, you stinkers. I was just going to set up for the macro pullback, and it took a quick little hop. No follow through though. Maybe it was. Maybe that's going to turn out to be a good thing. We could do the second push on this now that we know the limit of that bar. Oh, and they slipped us a tick on that too. Wow. All right, get up there then. See, the problem with this is I've given up almost half my profit objective with the late entry. Had I set it up on the hash mark as I intended, we would have hit our break-even trigger already. It's not to say the trade won't work out. It's just that it's a little unfortunate we got the fill that we did. Here we are into another macro pullback. I won't add to this position, but it looks like if it rallies from here, you'll get a chance to hopefully get that better entry. And if it rallies from here, that's going to be a good time to start rolling my stop up. There we go. So all I'm doing now is I'm pressing the trade. I'm pressing the buyers, forcing them to commit to the new support down here. Obviously, we need to see them take out this high. Oh, I should have put a runner on. Oh well. If it fails at this high, then they would reverse and retest the lows. So it's probably as good a time as any to get out. Here, we'll give them a little nudge, give them a little push. Get up there. Come on, get up there. No. If it triggers here now, then we have a 4-arrow consolidation, so we should be all right if the buyers can muster another push before getting down too low. Again, I'm being a little bit more aggressive with my stops, perhaps more aggressive than I should be. If you haven't already participated in this trade, buying the 4-arrow consolidation might be a good way to get in here. So we've produced the signal, and here come the sellers again. Come on, buyers, where are you? Get up there. Oh, all right. Well, we'll see here in a moment whether that was a good call or not. Good call to take our hit early, that is, or whether I should have left my stop below the low. Okay, now we've got the 4-arrow consolidation, and they keep running away on me. I'm not going to take a second push on this one. That left me too far away. So it was a good call to take our hit a little bit early. It did save us a couple of dollars. Jim says the NQ is trading at last Friday's high. So we have a little bit of a double top, perhaps. One thing's for certain, they don't seem to want to pay off to the long side, so that's going to make me more receptive to selling signals. We'll give it a try to the short side now, once the signal develops. All right, here's our first micro-macro cross. And can I cover it up there? Yes, I can. And I'm going to try to put a runner on. I'm going to disable my stop strategy for just the moment. Okay, so we've got a hawk signal. We'll see whether we see any follow through there. And here we're coming with our falcon signal. And here too, I'm going to try to put a runner on. Looks like we got tagged at break even on our hawk trade. We'll see if this develops into a macro pullback. Oh no, sorry, we took profit. Took profit and then got hit at break even on the remainder. Okay, come on, give me that macro pullback. Lots of support here on the Raptor. As we trade into the hard edge. So we'll see how they come out of the hard edge here, or whether we're going to see a failure. We did get the soft edge sell here. Now remember, the key to the soft edge sell on the Raptor is that we see that test of the extreme. Without that test of the extreme, I don't want to attempt a soft edge sell. All right, macro pullback, which is now moved into yellow bars, so I'm going to cancel that attempt. It may still work, but I don't trust yellow bars. It looks like the DAX is waffling a bit. Jim's giving me the play-by-play here. First it's losing it, then it's firming up. So the DAX not really leading today. Okay, interesting situation here in soybeans where we have a sell signal. We're against the ATR at the moment, so I would either place my order below the ATR or wait for the ATR to flip, but we're definitely looking at a selling opportunity here on the Eagle with soybeans. And we had a macro pullback signal here also in soybeans. So this may work itself into a 3-arrow consolidation or 4-arrow consolidation. You could take it a little bit early if you chose. Okay, here we're coming in with yet another macro pullback signal. Remember, we tend to only see 2 macro pullbacks within a trend. So I would respect this little bit of a trend line that we have happening. I know from the logic counter, the bar is going to finish down here at 945. Hash mark's going to print 944 3/4. You could either take it on the hash mark or you could offer up perhaps another tick. But that's not a half bad looking trade in soybeans if they can get down below that low. Michelle is asking about the Falcon on the NASDAQ. Let's take a look here. Yeah, the NASDAQ waffling quite a bit also and getting a little bit weaker. Um, While it was getting weaker, now of course it seems to be getting stronger again. So we've pretty much got the market sandwiched between primary resistance and the secondary resistance line. It's another one of these situations where if the signal prints near the high, I'll give it a go. If it prints near the low, I'll give it a go. But otherwise, you may be better off letting it get outside of this trading range before committing to it, because it too just can't seem to make up its mind. A lot more yellow bars cropping up here in the hawk also. So here's this trading range that we're looking at. Anything within this range is going to be a little bit of a crapshoot. We did pay off to the short side though, so that's one up for the sellers. Mark asks a great question. Mark gets the gold star this morning because I was waiting for somebody to ask me about contract rollover. Yes, today is rollover day. Your NinjaTrader, when you load it up, reminded you, hey, today is rollover day. This is a first micro macro cross signal, by the way. And I'm going to take a poke at it, but I'm not going to buy it unless we get above the high. So Mark's question is, hello, Eric. With today being contract rollover day for several futures contracts, is there any advantage to doing the rollover in the morning or later in the day? Is there any reason not to switch to the September contract right now? What are your thoughts? Yes, I am not going to be changing to September until the end of the day or Friday morning, whichever way you want to look at it. The most liquid market is still the June contract. And it will be for the remainder of the session. The floor traders do not start trading September until tomorrow. So even though technically today is rollover day, as day traders, we're better served with the June contract still. So in most cases, you don't roll over until you absolutely have to. Some markets you will see, some markets, not the index markets, some of the physicals will start to get thinner about a week into expiration. And those you can easily roll into the next contract month. If you're looking for, well, even if you're day trading it, like we did with soybeans, you could have rolled into soybeans a week or so ago. It would have been just fine. Into the, oh, I'm sorry, I'm getting ahead of myself. Soybeans doesn't expire for a couple of weeks yet. But I think you get my meaning, that you can, I'm trying to do two things at once here. That's my problem. I'm multitasking. There we go. Okay, so I've switched to the parabolics. Actually, maybe I'll stay with the ATR for a moment. All right, you know what? I'm going to give this trade the benefit of the doubt. I'm going to leave it at break even. See if we can't ride out this little bit of a swing now that we're outside of here. If you're looking to add to your position, adding above this little swing high is a great place to add to your trade. Remember that Trade Manager will tend to average your positions when you do this, so you'll want to make yourself a note where you got in initially. But yes, long story short, Mark, try to stay with the front month as long as possible, especially in markets like the currencies, markets like the indices. They tend to be, the front month tends to be most liquid right up to the very end. The physicals like grain, the grain markets, the meat markets, even a lot of the softs, if you're trading cocoa or cotton, orange juice, any of those, you can get in, you can do your rollover a little bit earlier. Come on, get up there. Get up there. Oh, see, Mark says he's looking at both, and they're surprisingly similar. Let's do that while we're waiting for the NASDAQ to explode. Okay, so first thing I need to do is I need to add the September NQ. So now I have the September and the June. Now what I'm going to do is I'm going to make myself a market analyzer. And that's going to give me one of those. And now I'm going to add the June NQ and the September Alright, so I'm not so interested in their pricing. I need to edit my columns now. So I don't care to know the ask, the bid, or the last. What I want to know is the daily volume. Right here, daily volume. And you can see September definitely fairly liquid, 27,000 contracts and counting. But we still have a lot more liquidity in the June. So this will not begin to even out until toward the end of the day, if you chose to keep an eye on that. And look at these stinkers here. They just rolled back far enough to tag my break even. Oh well. I guess I should have gone all in, all out. Oh, I think I misunderstood Mark. He was referring to the charts themselves. Yes, the charts will look very similar, whether you're looking at the June contract or the September contract. The only difference will be the valuation at the side. No, they'll pretty much be a carbon copy of each other. So here we are with the soybean trade, and they're still working on that macro pullback signal, pulling back a little bit. I might adjust my entry if the market continues a little bit higher, but I'm still going to respect this trend line here because that's where the sellers have stopped and the buyers have taken over. So I'm looking for the sellers to come back into this market now. The sellers jumped on board here around 948. I need to see them recommit. So here we have a new signal printing. We have our new warning dot. I know the low of the bar is going to be 945 half. Entry hash mark will be 945 quarter, but that's going to be above my trend line, just eyeballing it. So I'm going to enter either 945 or 944 3/4. This is the situation where entering a tick or two later should not be a deal breaker. Not with a market like soybeans. If they come out of here to the short side, they're probably going to remain short for the rest of the session. In spite of crude oil's earlier efforts to head lower, they're kind of dragging their feet a little bit. Still trading more or less within the sideways range. I was looking to sell below this bar right here. So here we're against the ATR, we're against the trend line. Next bar changes the ATR over. I wanted to short there. I couldn't afford it, but this was the plan anyway. And try to get crude oil back down to the lows. That trend line there is no longer valid, so we'll get rid of that. So, as suspected, today was going to be a little bit of a chop fest. We had 2 good rally days, and today the market not really paying off one way or the other. Or reluctant to pay off one way or the other. Oh, we did get a trend change signal here in the NQ. You can't see the signal print because it's right on this line. So top end of the trading channel. It's a viable trade. You could try this one also. Looking to buy the, no, you can't do it, not like that, you can't. Okay, I'd have to risk it to the swing here in the trend line. But not a very user-friendly. Now we're getting perhaps a bit of a trend change signal. And Jim, quick to remind me that we're near the 10 a.m. high, which we did retest here. We haven't printed a double dot. We're working on maybe an early trend change signal. Depending how aggressive you want to be on this trade, the early trend change signal, we do have our test of the extreme here, right? We have this little itty bitty test of the extreme. Now we're waiting for perhaps a failure. You can see we've got the warning dot. If this bar finishes red, it will print at hash mark right down there. That's our early trend change signal. I'm going to disable my stop strategy for just a moment. This signal will print down here. The trend line and the filter will both come into sync. Now this is a very aggressive posture. The nice thing about the early trend change signal is that it gives us a great place to cover the trade above, right? We know without a question of a doubt, if the market brings us in and trades back above these highs, we are on the wrong side of this trade. The downside with the early trend change signal is just that it's an early signal, and we may not have a market that is ready to reverse yet. A couple interesting things though. If I shoot a trend line like this, we got an overshoot here, we got an undershoot here, and then it came up shallow there. Trying not to read anything into the market, but the fact that it's shallowing up a little bit sometimes suggests that it is going to head lower. So we'll just watch this early trend change signal. Of course, the counter trend trade always or makes it more difficult for you to take a with trend signal. Michael writes, thanks for hosting yesterday's webinar. That was the one that I did with Rich Friesen. Richard's the psychologist, trader turned psychologist, very smart fellow. Michael says, it's amazing how all traders have the same baggage to deal with and how it influences how we trade and the trading decisions we make. Ain't that the truth? Okay, possibly getting a trend line touch here, and maybe even a buy signal forming. No late filter entry yet. I would feel a little better about the late filter entry. Okay, I'm hearing some scalp signals. Perhaps a 4-arrow consolidation in the works. Already a macro pullback signal, which tripped. So we did have a macro pullback right here. Would have hit our break even, would have just been tagged at break even again, making the broker very happy. He's getting paid all these commissions. I suppose if you wanted, you could do an OCO order here. Like, we have a rather well-established resistance and support area. If you were so inclined, you could throw a buy order in above the highs, a sell order in below the lows, and just let the market show you which way it wants to go. That's an option. As I said, though, today, the chop fest is not really getting me by surprise. All right, so now the Falcon actually printing a buy signal. So we got a chance here at a second push on this entry, which is probably advisable given where we're trading at the current high, given that the market's struggling. Another test of the extreme and perhaps a sell signal, also an early trend change signal. So this one too, maybe once again the OCO might be the better way to go here. So we'll throw in a sell order, throw in a buy order, and just let the market decide. So you can see we've got a double dot, we've got a test of the extreme. Once this one prints lower, it will print the hash mark. You're going to see the trend line change. You're going to see the filter print red. So there it is. There's our early trend change signal. We'll throw that just below the trend line. And where are our stops? I don't want my stops right there. We'll go with the parabolics. So now, of course, if we come back with a buy signal, well, then we will have had a late filter entry, providing this current bar goes green. Otherwise, our trend line will have gone out of sync, voiding the late filter entry. So just a whole lot of waffling. Waffle, waffle, waffle. And speaking of waffling, here is soybeans into yellow bars. That scrubs that order. So soybeans also non-committal. Now the thing with the early trend change signal is that you're going to want to hold your stop back a little bit. I'm going to let this signal engage. And I think we may have got tagged on the hawk. Yes, we did. All right. The reason I want to hold my stop back just a little bit is I'm probably, or it's likely, to see a test of the extreme here. So let's go with the swing high-low. And we'll just hold our stops just for a moment while the sellers and buyers try to get their act together. Coming into the hard edge on the Raptor, the Eagle got a little ways to move here before we encounter any support. We'll shoot a trend line just like so. And what happened to my... Darn it, what happened to my order here? Brought me in and stopped me out. Well, we'll have to hold out for the proper trend change signal there. And my stop has hit the break-even trigger, so I'm really pressing this one now. And we're going to go to parabolics. Not giving this trade a whole lot of room. Come on, get down there. This, of course, is just a onesie. This is the problem with trying to trade just a single contract. You have very few options available to you. You either, well, you have a lot of options available to you, but they're all mutually exclusive. You either go for broke, hold your stops back, let the market do what the market will do. You try to let the market run out. See, we would have hit our first profit target already. So, and banked some sort of profit. Here comes the retest now. Lots of support here around this whole 4500, 4501, 4502. If we can get inside there, we got a little bit of room. Come on, let's go. Almost into the hard edge here on the Eagle. You can see we're flirting with this bigger trend line. It seems to be lending a little bit of support to the market. If I had multiple positions, I would definitely bank some profit right here and leave the rest on to do what it will do. Get down there. Ah, darn it. Oh well. like I said, the broker's going to get a very nice, they're going to send me a very nice Christmas card this year. Crude oil consolidating a little bit. This is not a late filter entry. We're actually looking at an early trend change signal. So the trend line changed color. Oh, it's trying to change color the other way now. Here too, we've got a market. We're seeing a lot of consolidation this morning. We've got another market here that we could do an OCO on. We can buy above this double high here, which seems to be giving the market some problems, or sell below these lows, which is obviously supporting the market. So at the moment, it looks like the buyers are going to make a run to this whole 60-90 area. Yeah, another market in consolidation. Okay, here we have a first micro-macro cross signal. I'm not super excited about it because we haven't seen any follow through one way or the other. I would want to cover it above the high to try to give myself a good chance to ride out any type of swing that we have going on here. But you see what's going on? The longer the market trades, the more it starts to look like a great big trading range. And we are right smack dab in the middle of this range. The yellow bars are the dead giveaway. The yellow bars, no follow through on the signals. Okay, Jim is asking, can I see the YM? Absolutely. This is the mini Dow. The Dow looking a lot stronger than the NASDAQ, actually. If we shoot a trend line across the tops here, maybe a slight overshoot. Nothing too terribly exciting on the Dow at the moment. Oh, they did fill me. Look at that. I got filled on a slip too. Ay, ay, ay. This is no fun today. They're not being very nice. Yeah, like Jim says, horrible fill. It certainly is. When they start slipping your fills like this and no follow through, you know what? It's one of these days where if you're going to dip your toe in the water, maybe it's best just to do it with a onesie. If it works out, great. If it doesn't, well, it's a single. It's not going to cost you a whole lot. But notice where our entry was. It was right on the hash mark. Look where we got filled. There was no selling here at 45.03 half. The first sell order was 45.03 quarter. The sellers just disappeared. Yes, I know. Thank you. Thank you for that reminder, NinjaTrader. Now, that's not to say there is no selling. There is selling. They were selling here 45.12. Managed to push the market down. But right now, the buyers have control of the market. They bought it up from 45.01, more or less, 45.01 half. Now I got to see these sellers come back. Come on, sellers. You got to make a real effort here. I'm tempted to roll my stop above this swing high. I'm holding just for the moment. Because of the lack of selling that was going on here at 45.03 half. Let's see if they fail again. Yeah, look at that. There's nobody selling 45.03 half. Got it. Yeah. Jim says, let's see, that feeling that comes to mind is, what is it? Oh, yes, it's annoyed. Yeah, annoyed is right. Well, 45.03 half is a big number for the sellers. If they can take 45.03 half, we got a chance here. Otherwise, I'm going to take some serious heat on this trade. You know what? I think it's going to be prudent to roll my stop right there. I'll give them a couple of ticks extra. I'll give them another 20 bucks. So what I've done is, you see, the problem with this particular trade is, yes, we've had tests of the extreme here, or enough that I would consider that a test of the extreme. The market has come down. We've broken this support area, so now we're getting the retest. Oops, a daisy. Come back here. So now we're getting the retest, and we should see the market continue lower. Right now, it's not doing that, is it? So if they fail right here, they're going to retreat higher still, and there's no way to know whether the sellers will recover the market here and eventually move it lower, or whether they're going to lose their grip entirely. Let me see this line right here. And we get a retest to the other side, in which case the buyers will eventually rally the market and hit me for the whole amount. So my thinking is, because the sellers have made a stand here, because it is a retest, that's probably a good spot to roll in my stop. Reasonably tight. I don't mind giving them, I'm trying to give them as much wiggle room as possible, but I really don't want to give them any more of my money than I have to. So here we are again. Oh, good. All right. Did you see that? How they reacted to that 45.03 area? 45.0350. Did you see the follow through that we had when the sellers finally showed up? Okay, I think I'm going to go with my parabolics now. Now we've got the big low down here at 45.01, which we just tapped, hit our break even. And I know, you know what, for this one, let's see how it follows through. I'm going to take the break even off. Oh, there it goes to break even again. It looks like once I turn the break even on, I can't turn it off. No, I can't. Oh well, we'll leave it. Good to know. I did not know that. James says, thank you for doing that. You're driving me crazy with those break-even stops. Looks like I'm going to have to turn it off because it keeps engaging the break-even trigger. Oh, what if I turned it off? Would that help? So this is not good that we broke 4501 and now all of a sudden the sellers have disappeared again, or that the buyers are jumping on board. I know there's a lot of support down here, as I said, around this whole 4,500 area. So it's natural for the buyers to want to jump on board early. Jim's asking, can you X out the break-even trigger? Yes, you can before it's engaged. You can turn it off that way. So yeah, good tip. But what I've done is I've disabled my auto stop trailing for the moment, and I'm going to see whether or not that will prevent the break even from automatically rolling down. Craig is asking, how do you turn the break even off? Very simple, Craig, and actually we've got a signal here which I'll point out. This is now our trend change signal that we were waiting on. But to turn the break even on and off, you go to your strategies window. You highlight your trade manager or trailblazer, whatever the case may be. Now, to make any changes to it, you first have to turn your tool off. So you go here to the Enable tab and you click False and apply that. You're going to see it disappears. Go to the very top, and here you're going to see Auto Break-Even Parameters. Enable, disable Auto Break-Even. So I guess they really only needed to put Enable Auto Break-Even. It's true. Turn it to false. It will turn it off. And then you go back down here and you enable or you re-enable your trade manager. Now, when you place a trade, and this, I'm just doing this for demonstration purposes, you see there is no break-even target. Nope, still rolled it. So it looks like once that break-even stop gets hit, it's going to want to keep rolling down there to break even. The other thing you could do, I suppose, to hold it back is you could go like break even. See, I gave it a a minus 10 on the break even, so that forces it to stay back a little bit. All right, and let's enable our stops now. Hooray! Look at her go. Now that they actually decided. Okay, I think our Falcon trade also doing fairly well. I will also use parabolics on this one. Yeah, so that's going to be an easy way, or an easier way, to keep that break-even stop out of the way. Just roll into your negative break-evens, and that will keep your stop back. Yeah, Craig says it should be easier to turn the auto break, turn it on and off regarding the auto break even. I suppose there was only so much room on the dashboard. That's what we call this unit here on the side. People who are trading on laptops are already complaining it's too big. So I think there were only so many things the programmer could put on here. My gripe is that he chose a lot of the same colors. I wish he would have. There's so many colors available to you. Why did you make everything the same color? So when I can't tell you how many times I used to go hit the break even button and I would hit the close button, or how many times I go to hit submit and I hit accept for the stop strategy. It's like, sometimes you do things in the heat of the moment. Oh, way to go, Jim. Jim banked 20 ticks on the Canadian dollar. Well done. That's not always an easy market to trade, the 6C. You can see now we are back to where we started the session, more or less. And we got tagged on our trailing stop here on our hawk trade. Not bad. You know, we're holding our own, given that a lot of these trades were just onesie-twosie type contracts, and we got tagged at break even a few times. But it worked out for the best, especially on the hawk, given the lack of follow-through off of some of these signals, like your macro pullback signal. Although I do believe that did find technically it found its profit target, but we had to take a later entry. Yes, it did. It found its profit objective. This could well turn into a macro pullback signal also. We'll see how the parabolics manage this. If this bar turns red, I'm probably going to go with my bar high-low strategy and take my stops in above the high of this bar. There we go. The reason is, once again, the sellers have shown me their commitment to shorting here. If the buyers come back now, then they're likely to go bar for bar. So green bar, I may as well protect some profit. Let's go. Come on. You know you want to. Oh, okay. I just noticed Michelle's question here. She said she took a macro pullback on the Dow. So we'll load up the Dow and we'll take a look at that. She said she's not sure what to do with her stops, but she says, don't worry about it. I took profit already. So let's take a look here at the Dow. Was it this macro line pullback up here that you bought? Because we don't have a selling one yet. If that was and you were able to sneak out a couple of dollars profit, good for you, Michelle. Maybe you mean the first micro-macro cross. I have a feeling that's what you're referring to. First micro-macro cross to the downside. And yes, Michelle's right. Like, what do you do with your stops here? I know the first micro-macro cross, high probability signal, usually carries a lot of momentum, but honestly, I would be hesitant to put my stop right there. Even if I dialed the ATR strategy in, that would still make me nervous. Now, I think it works out, or almost. This is the kind of scenario where technically, if you're trading by the textbook, there's the best stop right there. Now, obviously, this is only going to give you a single. A lot of times, if I'm relegated to trading a single, I'm not going to use my profit objective. I'll see how far I can run the trade out. This one, I would probably go for the bend in the macro line. You can see that where the macro line bends, very often it gives the market some sort of support. So we see these bends through here. It eventually gave the market support here. Where is there another crest? So there's a little bit of a bend through here. And you can see it did act as a little bit of a resistance barrier there also. So the notion is, if this market is going to start to retreat, we might see some sort of resistance come in near there. So the ATR stops at the moment look too tight to me because there hasn't been, as it turned out, this was your test of the extreme right there. But I would have been thinking, might see a bigger pullback. I want to try to hold my stops back somewhat. But it looks like it worked out, and good for you, Michelle. I'm very pleased to hear it. So the Dow making nice little progress lower. And we did all right here on our Falcon trade. This is on the NASDAQ now. use the more aggressive bar high-low strategy just for giggles and grins? No, we would have been stopped also on the parabolics. So we've managed to pick up another $10 or so by using the bar high-low strategy. Great, nice little trade there. Hooray for us. I know Richard says that we're supposed to stay calm and collected as traders, and usually I can do that, but every once in a while the market just rubs you the wrong way. Okay, so not a bad morning given the chop fest that we're looking at. Michelle says there's a macro line pullback on the hawk. We have a similar thing here going on the NQ, except it has turned into yellow bars, so I'm going to avoid it. I'm not convinced the market is fully committed to a trend here just yet. Yes, we saw a nice little progression lower, but look at the rebound that we're getting. Yes, there should be a test of the extreme before there's a reversal, but the tests of the extreme have been rather slight also. Here is the soybean market, which has been retracing all morning, now coming in with a green bar sell, still against the ATR. I still need to see this thing flip over. There we go. So it has now flipped the ATR over. Now, I'll tell you folks, soybeans, if you look here, soybeans very much still in a sideways range. So this is a very aggressive type trade going on here, and definitely one that you're going to want to hold your stops for as long as possible. Maybe even hold them back just a little bit extra. Okay, if you excuse me for a couple minutes, I'm just going to go get a glass of water, and I'll be right back. Okay, I'm back. What did I miss? Not very much. Well, crude oil still kind of moving sideways. We do have a first micro-macro cross signal in crude. This is now on our hawk. Now the hash mark's going to print right here. 1, 2, 3, 4. I got to give up almost all my high probability profit target in order to get entry. Again, not the most inviting looking of trades, but if we take out the low here, it seems that maybe crude will commit. So what we're looking at here is, again, this whole concept of testing this area, retesting it. There we go. See if there was some follow through, some recommitment, which there obviously was. So that worked out all right. If you bracketed the crude oil market before off of that channel with the OCO orders, you would have obviously been filled to the short side already. And you may want to consider taking profit on that rather decent move to the downside. Here, now on the NQ, we're kind of flashing, well, we are flashing a first micro-macro cross to the upside. I know I always say it's a very high probability signal, but honestly, if you're going to take this one, I almost think you need to cover it all the way down here. Why? Well, because the market is really in a downtrend, right? If you showed this chart to a kid and you said, is it going up, down, or sideways? I think most kids would tell you it's going down. So to get a buy signal in a downtrending market does not give me a warm, fuzzy feeling. And besides, we've kind of hit a few good trades here. We hit a nice little move on crude oil, picked up a couple of bucks on our Falcon, picked up a couple of dollars on our Hawk. We're having a very good morning so far. If I was trading my 3-trade quota, I would have it. Well done, Glenn. Glenn says he took the 720 signal on the Hawk on the NASDAQ. So that was our first micro-macro cross signal here. He said took half off at 20 ticks and the rest at 54 ticks. Nicely done, Glenn. Well done. Glad to hear it. Good job. You can give yourself a pat on the back for that one. Like James says, that's huge. That's a textbook trade. Definitely. Definitely to peel off 20 ticks and then to have the composure to hang in there for the majority of the run. That's well done. He said he was running a 2.3 ATR. So that would have stopped you out right about there. I think Jim must have been at yesterday's webinar because he's saying, Glenn, how do you feel? That's what Richard was always doing yesterday. How do you feel about that? How does that make you feel? Yeah, Glenn says I'm all smiles. Yes, good for you. A little bit of waffling going on again now in the NQ as we see. Oh, there was a green or a red bar by there for a second. So what we're witnessing right now is our test of the extreme. It's very slow, but that's what's going on. We're seeing the sellers try to recapture the downward momentum, and now we're going to see whether the buyers pick it up and stop the sellers short. But here too, we're starting to develop too many yellow bars. Yellow bars always occur when the trend starts to change over. That's natural, but when you get too many yellow bars printing, that just shows you that the market's losing it. They can't keep it together. All right, having said that, now we're getting a sell signal here on the Eagle. This is our first with trend signal. And we're also getting a sell signal here on the Raptor. I'm hoping this develops into a double pullback, but no, there they go. They're not going to give me that. So here's the Eagle now. Our trend has changed. Our ATR has flipped over. We do get an opportunity here even for a second push on this bar. Can I cover it all the way up there? Yes, I can. A little bit, I won't lie to you, it's again one of these trades not giving me a real warm fuzzy feeling. I think because of the lack of momentum that we've been seeing, the lack of commitment one way or the other. I would not be surprised here to see the buyers give it another go, try to push the market down some before or try to rally the market up some before the sellers come and try to push it again. All right, so if the Raptor gets into this double pullback now, which is what's going on, we've got pullback 1, pullback 2. If it comes out of here now with a sell signal, that will be a good selling opportunity. You can see we're still hovering around this 4,500 area, just a couple of points one way or the other. So here we are now with a red bar buy. And here too, you could use your OCO if you wanted, because we have a well-defined support and resistance area where the market has shown its current limits. And also getting a trend change signal now in the Falcon. So it seems like across the board things are starting to look a little bit more bearish again. We'll see whether or not there's any follow through off of this. And now this is a lot more for demo purposes now, folks. If I were trading for real, I would be gone right now. I would say thank you very much. See you tomorrow. Because you get to a place where the law of averages start to catch up with you. You know, we did, for those of you who were in the webinar yesterday with Rich and I, Richard did that coin toss game. And it's actually a pretty good exercise to do for yourself, not the flipping of the coin so much, but I've always suggested to people the optimal number of trades in a day is how many times you can flip heads on a quarter. How many times can you flip heads in a row on a quarter? So if you go grab yourself a quarter and you flip it, you know, sometimes you'll hit a really good run. You might flip 5 or 6 heads in a row. Sometimes you can't flip a single head. All you'll do is toss tails. But as you do it more and more, you're going to average probably about 3 tosses in a row, where you toss heads 3 times in a row, and then you're going to throw tails. Trading in that respect is kind of similar. Only because, in essence, every trade is essentially a 50-50 proposition. Right? The market's either going to go up or it's going to go down. There is no third alternative. But there are certain elements in trading that don't make it exactly a 50-50 proposition. For example, you know, we have our high probability signals like our first micro-macro cross signal, which skews the probabilities in our favor. Like the macro pullback signal, which skews the probabilities in our favor. So even though each individual event is a 50-50 proposition, there are some extraneous circumstances that will help or hinder the trade. One of those things that I find that hinders a trade, or traders in general, is over trading. especially as you journal your trades, you're going to see that the market you're following is only going to give you a certain number of quality trades every single day. There's going to be days where, especially if you're in sim mode, where you might journal 10 trades. And out of those 10 trades, 4 will work, 4 will be profitable, 6 will be losers. And out of those 6, maybe half will be due to poor money management, poor trade management, I should say, and the other half will be due just to the fact that it was a poor signal. But you start to develop this sense that the market only is going to offer you X number of decent trades per day. And I think it varies with the market. And of course, there are days where the market is just on fire, like it was Tuesday and Wednesday, where you're in there with both hands, you're taking every single signal you can get. But then there's days like today where you start to question the quality of the signal that's in front of you. Just because you've seen so many signals, it's like, okay, does this one really have the strength to follow through? And that's why I said, if I already had my 3 trade quota, I would probably not be looking at these trades. Or if I did, I'd probably maybe throw a onesie on just to see what gives. Yeah, Jim says something interesting here. Richard mentioned this yesterday. Jim says, what was that Richard was talking about? You can have 10 winners in a row or 10 losers in a row for every 100 trades or something like that. That wowed me. Yes, there is a very real statistical probability, and Richard proved it when he was doing his experiments, that you can have 10 losing trades in a row. This is why I always encourage you to use the risk percent model and try to restrain your risk to a certain percentage of your account. Because if you're risking, say, 2% of your account and you have 10 losers in a row, you are essentially going to experience a 20% drawdown against your account. Now, in actual fact, you won't, because as your account diminishes, the amount that you keep risking at 2% becomes less. So for instance, if you're trading a $10,000 account, your initial risk is $200. If you dwindle it down to a $9,000 account, your 2% risk is $180. So the math behind it, but for rough figures, you would have a 20% drawdown. Now, that would be terrible, but even with a 20% drawdown, you are still around to trade the next day. Contrast that with what a lot of people do. Well, they're routinely going to risk 5%, 7%, 10%, 15% of their trading capital on a single trade. And I've met people like this. People who risk far more than they can afford to lose, and then they wonder why they blow up their account. Well, if you're risking 10% on average, 10% of your capital, so if you have a $10,000 account and you routinely put $1,000 at risk, well, you don't need to be a mathlete to know that if you hit a losing streak, 10 trades, you're out. Actually, with the commissions and fees and stuff, it'll be more like around 7 trades before you're so broke you can't afford to take a position anymore. But that's why money management is so important, because you honestly don't know the next trade whether it's going to be a winner or a loser. And again, that's why Richard was suggesting, you don't get tied to the emotion of did the trade work out or did it not work out. Yes, it's always pleasant when the trade works out. And yes, it's always unpleasant when it doesn't work out. But if you followed your rules, if you implemented your strategy, if you did everything you could to make the trade work out, then you should be content with that and let the money management aspect of trading deal with the rest of it. I'm sure you've all seen the Money Expert. I'm having trouble finding it now. Hold on a second. Here we go. Okay, so here's the Money Expert. For those of you who haven't seen it, I'm just going to go over it really quickly. You can play with it yourself here at indicatorwarehouse.com/Money Expert. And the whole premise is that the money management will eventually keep you in a trade long enough that you can capitalize on your winning trades and minimize your losing trades. So here's Joe. Joe thinks he's being smart by only trading a single contract. He starts with 10,000, 100 trades later, he runs his single contract trades up to 14,500, somewhere in there, 14,500. Now, if he had used money management correctly, in theory, he could have run that up to about $180,000. Now, I don't like to see the graph like this because this is very much in theory, but I have seen people turn $40,000 on a single trade. So it can happen. $180,000 maybe not, but 40 grand, it can happen. So here's the whole premise, that the signal is only 50% profitable. Half the time you're right, the other half you're wrong. Essentially a coin flip. But this is key right here. We're controlling our risk, starting with a $10,000 account. And this is actually a pretty good curve here. So Joe is the blue line, you're the green line. When Joe wins, you win. When Joe loses, you lose. Joe takes his 10,000, runs it up to about 13,000. With money management, you would have managed to increase that to about $18,000. Very realistic curve. And what you can do is, if you click on here, you can see the breakdown of the trades. And you're going to notice that there's no real home run trades here. The biggest trade looks like it was about a $400 winner. And the programmer did that on purpose because that simulates real life, right? We don't hit these. There was another tool that we were using for a while that every once in a while would throw in a $2,000 trade, a $2,000 winner. Well, that's really nice, but honestly, how often do you hit a $2,000 winner? Probably not as often as you would like. But you can play with this. You can dial down your percent profitability. Say you're only right 40% of the time. You're still controlling your risk. Okay, well, this is an interesting curve. Notice how this could be very realistic. Joe, in this case, did a little better than you. He started with 10,000. Losing losing trades through here because we're only right 40% of the time. Joe ends the day with 9,600. We end the day with about 9,200. But look at what happened here. The trading got all the way down to about $8,000, $7,900, but we did manage to claw our way back. Again, the money management, right? When you lose, you don't lose more than you can afford, but when you win bigger. Let's try it again. Okay, well, again, that type of curve isn't realistic. This one's a little bit more realistic. And remember, this is only 40% profitable. So Joe starts with $10,000, finishes the day, looks like about 11,000. We start with 10. Look at that. At one time we had run up to 18,000, but then we hit a string of losers and we still finished the day at 12,000. So still not bad considering it's a 40% winner. This one we're dead even with Joe, dead even with Joe, dead even. Okay, there we go. Once again, we lost a little bit more out of the gate when Joe was losing. We won a little bit more when he was winning. At the end of it all, we're pretty much even up. So we're no worse for wear by using money management. And if by some miracle we stopped losing 60% of the time, we actually would have turned that around. Now watch what happens if we have a slightly more profitable signal. Say like your first micro macro cross. Say like your red bar buy, green bar sells on your Eagle, or your double pullbacks on your Raptor, or your late filter entries on your Falcon. Look at that. Look at the magic in that. So Joe takes his 10,000, he runs it up to about 17,000, 18,000. We take that same 10,000 and run it up to 32,000. This is a very realistic curve. I have seen people do this. This is not out of the realm of possibility. Yeah, Richard, Jim is also asking about a comment that Richard made about the algos catching on. He said, Richard also talked about how a strategy has to be tweaked after time because of the algos. Now, the algos are the algorithmic traders, the black box traders, the computer traders, the high frequency traders. It's essentially, I tell this to people, I get a lot of people after me trying to tweak their signal, right? Because it's human nature. You want to, you think if you can just eliminate your losing trades, you will be a successful trader, right? Makes sense. If I can just avoid the bad signal, I will make money. But that's not the case. If, now it won't happen, but here's a big if. If you ever developed a signal that was right 100% of the time, never had a failing signal, it would probably be good for about a week before the computers down on Wall Street got a handle on what you were doing and would start fading your positions. I know it doesn't make sense on the surface, but that's the way the real world works. Is the trading floor is, or trading in general, there's a certain degree of chaos to it, right? A certain degree of uncertainty. And that will always be there because there will always be traders trying to take the opposite side of your trade. And at the end of the day, it's not your signal that drives the market, right? We tend to forget that sometimes. It's like being in a car, driving in a car and thinking that the road is moving under you instead of you moving on top of the road. Next time you're driving, imagine that, and you can actually imagine yourself in a video game type environment where your car is stationary and the road is moving underneath you. But that's not what's truly happening, is it? What's truly happening is that you are moving on top of the road. And it's the same thing with the market. Yes, we may have a signal, but the market does not move higher or lower because this is a first micro macro cross signal. The market moves higher or lower because the market moves higher or lower. Because there's more buyers than there are sellers, or more sellers than there are buyers. A subtle difference, but an important one all the same. So yes, if anybody ever did develop a signal that never failed, it would not be long before it did fail. Some of you will remember a story I shared with you long before Indicator Warehouse. Adam, he had a lot of indicators that he wanted programmed for him by programmers. So he would approach programmers. That was actually how Indicator Warehouse got started. Adam would hunt down these programmers. He would say, I want the indicator to do this, that, and the other thing, and he would hire a programmer to program it. And then eventually other people were interested in it, and he started selling his software, and thus Indicator Warehouse was born. But he came across a group of programmers, very clever people. I spoke to one of these guys. I understood maybe every third or fourth word he said. Like, these are brainiacs. These are geniuses in the true sense of the word. And they designed an incredible piece of software. And it worked very well. But they weren't trading it yet. Why? Well, because it worked for a while and then it would take a losing trade. And rather than say, well, that's trading, they would tear it all apart and reprogram it until they could account for that latest anomaly, and then they would go back to testing. And of course it would work until it hit another losing trade, and then they would tear it all apart and go back to testing. And Adam's kind of fallen out of contact with these fellows, but the last I heard, they still were testing and not trading. Like Ed Sequoia said, if you don't want to get whipsawed, stop trading. And this from one of the most profitable traders in trading history. So if it's okay for a trader like Ed Sequoia to take a loss, what's that say for traders like you and I? Do we honestly think that we're immune to losing trades? I saw a documentary about Paul Tudor Jones once, and he took, I think it was a 7% hit, 7% drawdown. He was not happy because obviously 7% to somebody like Paul Tudor Jones was hundreds of millions of dollars, but maybe to make matters worse or better, I suppose, it depends how you want to look at it, it wasn't his money that he lost. He had to answer to a lot of people, why did we incur this loss? And perhaps the worst part about trading other people's money is that other people don't understand how trading works. Especially if you are Paul Tudor Jones, they think you are some sort of, well, he is a prodigy. He's very good at what he does, but they think that, hey, you're Paul Tudor Jones. What are you doing taking a losing trade? You know, it's like if you bought the same stock that Warren Buffett did and the stock tanked. It's like, hey, Warren, what's up with that? But these things happen. and they happen to the best of us and they happen to the worst of us. The key is survival. Don't risk so much that you can't hang in there long enough to realize profit. Don't make your stops so tight that you can't ride out a couple of swings before the market actually gets ready to go. Like right now, I'm more encouraged, especially if this bar gets below the low. If this bar forms, manages to finish lower, I think we're going to be in good shape here, and it'll be time to start rolling the stops. But trading is very much a game of probabilities. Very much probabilities, maybe more so than anything else. Certainly more so than risk-reward ratios, which are a very crude attempt at skewing probabilities in your favor. All right, you guys, it's getting into the lunch hour, so we should see the market either pick up or go dead flat. I know there's a good prediction for you, right? It's going to do this or it's going to do the other thing. Sometimes things cut loose a little bit around the lunch hour. If you're going to trade this afternoon, I think we're going to see the NQ tail off. I really do. I think we might see the stock indices tail off. Soybean trade is working out not too badly. Soybean market making a little bit of progress to the downside, so it looks like that's going to be a bit of a winner. But caution is the word du jour. Crude oil dead flat. I would not touch crude oil for the remainder of the day. All right, I'll see you again tomorrow morning for our Friday morning session. We'll talk to you then. Bye for now.